Hi, good evening to everyone. Thanks, Alok, for taking out this time, and thank you to all the participants who have connected. So in this last 7-8 months where there was complete madness in the sector, it's good to see that some NBFCs have been able to hold their ground and really differentiate themselves, and Arman has tried to be in that camp. So Alok, maybe over to you, and maybe you can tell all our investors how last 6 months were, and what all things we did, and what is the outlook for us. So yeah, over to you, Alok.
Thanks a lot, Digant. It's been sort of an uphill battle for the last couple of quarters, but really not as bad as we expected, but little more on that as I give my sort of opening remarks. But thanks everyone for joining, and good evening to all of you. Hopefully I'm audible to everybody on the call. This is, of course, the year-end investor conference call for fiscal 2019. And as Digant said, I'm joined on the call by Amit Bhai and Vivek. Jayendra Bhai is unfortunately traveling at the moment, so he's unable to join us. Firstly, we have issued a press release for the past quarter, and hopefully everyone's had a chance to review it. If not, it's available on the company's website and on the stock exchanges as well. So as you have seen from the results, we've had a fantastic year by any measure. The consolidated assets under management for the company has grown from 423 crores to 687 crores in 1 year. This is a 62% growth and 6% above our beginning of year target of 650 crores. This is despite the liquidity issues faced by the industry during the last 2 quarters. Comparing Q3 over Q4, the AUM grew from 586 crores to 687 crores, which is a 17% growth. The CAGR, which is the compounded annual growth rate of the AUM, has been about 43% for the last 5 years. So and that's counting the demon years. So we are confident being able to maintain this average growth in the foreseeable future. Our disbursements have grown from 542 crores to 790 crores, which is a 46% growth year over year. As you may recall, fiscal 2018 was frustrating in many aspects because of the impact and the effects of demonetization and other industry-level issues. I'm happy and proud to announce that we have achieved a record profit this year of 21.33 crores. That's profit after taxes. This figure is about 193% increase over the previous year. Q4 profit compared to the same quarter the previous year increased 127% from 2.42 crores to 5.43 crores. Our total employee strength grew from 1,100 to 1,600 compared to the previous year. Comparing the segment-wise businesses, microfinance, which is our biggest division, grew by almost 70% last year from 287 crores to 485 crores. We have opened 31 new branches and are currently located in 6 states, servicing 2.75 lakh customers approximately. Income from operations in this division was approximately 95 crores, which has grown from 51 crores, an increase of 85%. Overall, the microfinance division accounts for approximately 70% of our AUM and 70% of our profits. The MSME segment, which is individual micro enterprise loans to the rural segment, was started as a pilot in 2017 and expanded in 2018. We have performed admirably in this segment and are quite keen to further expand this division in the coming years. AUM from this division grew from 46 crores to almost 100 crores over the previous year, which is 117% growth. We are currently operating in 2 states in the MSME division with an active client base of 25,000 customers. Income from operations in this division is about 24 crores, up from 6.9 crores the previous year, which is a 240% increase. Overall, the MSME division currently accounts for about 15% of our AUM and approximately 19% of our profits. Our oldest division, which is the two-wheeler division, faced significant headwinds in the previous year. As many of you may know, sales in the two-wheeler industry were significantly impacted due to the new third-party insurance law and the general slowdown in the sales in the industry. Despite these headwinds, the AUM grew from 90 crores the previous year to 103 crores in the current year, which represents a 14% growth year over year. Income from operations stood at 23.3 crores, up from 20.3 crores, which is a 14% increase. We have commenced a pilot to start rural two-wheeler financing based on a hybrid of our microfinance and MSME business models. So far, the results have been encouraging, and we hope that this pilot will ensure new avenues for growth in this division. We are currently operating in Gujarat with an active client base of 36,000 in the two-wheeler division. Overall, the two-wheeler division accounts for approximately 15% of our AUM and 11% of our profits. Now, speaking of the recent, or not recent, I guess possibly ongoing liquidity crisis in the NBFC sector, I'm happy to report that barring a marginal increase in our cost of borrowing, we have been mostly unaffected. We have been able to raise adequate funds to finance our ongoing operations without any hiccups and continue to maintain our profitability. Post the liquidity crisis in Q3, we had put a hold on our branch expansion strategy, and as per the advice of the board and our trusted advisors, started maintaining sufficient cash reserves for at least 2 months of ongoing operations. As we mentioned in the press release, maintaining a higher cash balance is sort of a two-edged sword. While you get comfort around the uninterrupted operations in the event of any short-term liquidity crisis, it also bears a negative carrying cost that will impact the bottom line. Given the market conditions, we believe this was a prudent call, and we will continue to reevaluate this strategy and slowly reduce it as the market conditions improve. To provide further comfort, our business model carries a natural positive ALM. Our average loan tenor for microfinance is 18 months, and for MSME and two-wheeler, it's 22 months. Our average debt tenor is about 36 months. Therefore, even in a worst-case liquidity scenario, we have no issues servicing our debt. In Q3 and Q4, we have managed raising around 295 crores of funds, which includes 70 crores through securitization route, 50 crores through PSU and private banks, and 35 crores through NABARD refinancing. The balance was from other financial institutions. Quite recently, in fact, we have just closed the third foreign NCD transaction, and we are in active discussion with other foreign funders for various ECB or NCD transactions. Our efforts are going towards diversifying our debt pool and reducing our overall cost of borrowing. The total debt outstanding was approximately 540 crores at year-end, of which 35% is from banks, 11% from foreign NCDs, 3% was in the form of Tier 2 debt, and the balance 50% was from other financial institutions. This ratio has skewed away from banks in the last 2 quarters as they become more conservative towards NBFC lending. The total equity base on a fully diluted basis was almost 130 crores. This brings our debt equity ratio to about 4.15. As such, we are sufficiently capitalized for our immediate growth plans. Our new ERP system for microfinance has gone live in April, and the field operations are slowly but steadily adapting to the new changes. We expect significant efficiencies and risk advantages to be gained within the next 6 months. NPA numbers have remained steady in the last few quarters, with number of finance reporting about 0.55% for microfinance and Arman Financial reporting 0.02% for two-wheeler and MSME. As always, ladies and gentlemen, I'm thankful to the whole Arman team, which has worked extremely hard this past year and made such a difference to the lives of our customers. Believe me when I tell you that such results would not have been possible without a highly motivated and a balanced team working tirelessly towards a common goal. So far, fiscal 19-20 looks pretty bright, and we hope for a another great year going forward. Thanks to all of you once again for your support and trust. And I request the operator to please open the call for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking your question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Srinath V. from Bellwether Capital. Please go ahead.
Good evening, Alok. Just wanted some highlights on the MSME business. Could you please share the NIMs and the NPA for the business and share some kind of future outlook and what kind of branch growth are we looking at, and are our existing branches completely sweated out, or are we looking to grow in the existing branches as well? Some kind of future outlook on the MSME business and NIMs and NPA numbers.
Sure. So, thanks, Srinath, by the way. So the MSME division, I think, has performed pretty well over the last year. We have more than doubled the portfolio, and we are targeting to increase that portfolio to at least about 180 to 200 crores of portfolio in the coming year. This is kind of balancing our conservative methodology of not growing too fast versus, capturing market share in this sort of fresh new business segment which everybody is seems to be getting into, but with different methodologies and different kind of systems in place. As far as the asset quality is concerned, and touch wood, pinch yourself or however superstitious you are, it has been performing extremely well. NPA levels are somewhere around 6 to 7 lakh range. So on a percentage basis, it will be in single-digit basis points. And the portfolio is, cross 100 crores as we speak. The branches, some of the branches are approaching almost an 8 to 10 crore portfolio. These are at a 10 crore level. I would like to split the branches. So, but those are about 4 to 5 branches. The other branches sort of have a ways to go. For a 100 crore portfolio, I think we have currently have 23 active branches. 24 active branches, sorry. And we are planning to open another 10 to 12 branches in the coming year, mostly in the Madhya Pradesh area, a few in Gujarat, and we are considering maybe in Maharashtra as well, but haven't made that decision yet. But definitely will continue in the growth side for the MSME division. Now, as far as the profitability goes, we are fortunately at almost a 5% ROA in this book, so it's probably our most profitable book at this point. But that being said, I'm hoping I'm wrong, but I'm guessing that as the portfolio matures, the NPA levels will probably increase to a certain extent. So hopefully we can balance it out to a 3.5-4% ROA book.
And this kind of 100% growth in this book will be driven by the same sub 1 lakh ticket size, or are you factoring in kind of the slightly more larger loans?
We have been trying to target the larger loans. Honestly, originally I had anticipated that the average loan size will be around the 1 lakh range. Turns out it is closer to about 70,000 at this point. And I don't really want to push the higher ticket loans if the absorption capacity is not there in the rural side. So we are pretty conservative as far as our loan sizes go. We do a pretty thorough cash flow analysis, and then we arrive at a loan amount for any individual customer. So it's not as some of the other competitors are doing that they are relying on their microfinance customers, and if they have crossed a certain cycle, third cycle, fourth cycle, automatically they bump them up to 1 lakh rupee or something like that. So I don't really believe in doing that. I feel anything over 50 grand requires a much better underwriting or a much superior underwriting than what you would do for microfinance. And I think I've said this before that just because somebody has paid you 30, 40 grand on time for 3 years in a row or 3 cycles in a row, that does not mean necessarily that they will be able to pay you 1 lakh rupees on time, in the 4th year. So I think hopefully that answers your question.
Yeah, just slipping one last question in. Could you please help us understand this rural two-wheeler product, and how is it kind of different from what are you doing, and where the geographies that this rural two-wheeler is currently being done, and what are the kind of bikes, or how, kind of just to give us a flavor of how is it different from the current business you're doing, and how do you kind of plan to scale this up?
Yeah, so this will be maybe a long answer, but I'll try to summarize it the best I can. See, our current two-wheeler model is more on the urban side, where our salespeople are sitting at the larger dealerships, and originating loans at the dealership location itself. And at those dealer locations, we are competing with maybe 6, 7, 8 other financiers, could be banks, or it could be larger financial institutions, or it could be very well run and well managed regional players, such as myself, not to toot my own horn. It's difficult to grow in that urban segment because A, the industry itself is not growing very fast, and B, the margins are always under a lot of pressure because, there is a lot of competition to gain market share by some of the larger players as well. And so basically what we did was, under our MSME banner only, we started originating sort of the high margin kind of rural loans. So we have about a 6 crore portfolio in that current as we speak. And these are, sort of higher margins, so at least about 6% higher than what we get from the urban side. But why I said it's a blend of our MSME, microfinance and two-wheeler is that we are doing the same model as the doorstep monthly collection. So while the margins are higher, the OPEX is slightly higher as well. But we find, the competition a lot less there, easier to sort of originate, and not a lot of people, are following the same system. So what we have done is now we have started 2 separate branches in Vadali and Sehra of Gujarat, and this is where our MSME and MSME and microfinance branches are also located. But completely separate from that, we have started, kind of a blend model where our salespeople are sitting at the sub-dealers or smaller dealer kind of locations. There are other people who are also trying direct marketing as well. And we are we have started originating loans from that segment, and will be following that cash collection model only. So it's a little too soon for me to give you any concrete numbers, Srinath, but I'm hoping that this turns out to be, another avenue where we can grow the two-wheeler book.
Cool. Thanks, Alok.
Sure.
Thank you. The next question is from the line of Agastya Dave from CAO Capital. Please go ahead.
Thank you for the opportunity, sir, and well done in tough market conditions. Sir, my question was, this is something that you have addressed in previous calls or in your annual reports, but I just wanted to touch upon it again. The pre-monsoon showers have been very bad in Gujarat, and there is water scarcity, and there is a problem there. So, in your areas, if the monsoon falls, what kind of damage to demand or NPAs are you expecting, and how are you preparing for that in case that happens? That's the contingency part. How are you managing that? And the second, sir, on the MFI side, can you mention what kind of growth you're looking for this year? What's your expectation on the ticket sizes? Will they increase, or will your geographical reach continue to expand? And the third question is, in the last page of your press release, you have mentioned the combined NPAs of two-wheeler business and MSME business. Can you split them up, sir? There is a fall quarter on quarter. I was just wondering which segment has improved more. Thank you.
Yeah, sure. So, well, we'll go in order. So as far as I'll try to remember all your questions, but please interrupt me if I'm not going in the right direction. First of all, as far as the rain goes, see, I'll tell you a couple of things. After doing this personally, I've been doing this for about 9 years. There is always an area which has less rain, too much rain, too much crops, too little crops. There's always some election going on or some area which is slightly more heated than others. It won't be a large problem even if that occurs. Usually every year there is some area or another that we face drought kind of issues. We do tend to manage in those areas. There does typically, the NPAs do increase marginally, but it won't be more than a blip on the overall NPA levels of the segment or the company itself. Secondly, we are not really concentrating too much on direct agri. So we don't lend money to direct. Of course, allied agri like cattle and stuff, we do lend a lot of money towards that segment. But people who are solely reliant on farming, we tend to stay away from that customer base for numerous, probably obvious reasons. So to answer your question, no, I don't expect a significant impact on the rain. But that being said, let's hope the rain gods are kind and there shouldn't be any problem this year. Sometimes, even personally, I noticed that the rains are coming a little bit late in Gujarat over the last few years. So let's hope that that's the worst of the trend that we have to face, is that there'll be significantly low or late coming versus a lower average rainfall. As far as the growth in the MFI segment, we are at almost 500 crores right now. We ended the year at about 484 crores AUM. We are targeting to reach about 7 to 750 crores this year from an AUM perspective. Overall book size, we are targeting somewhere around 950 to maybe push it to 1,000 crore AUM for the consolidated on a consolidated basis. But again, that depends on a lot of factors, so I don't want to give very hard targets to you right now, because depending on how the liquidity situation and stuff comes around and how the NBFC sector is perceived, those figures might go up or down. So that's the best guess I can give you right now. As far as the NPA levels are concerned, if you were to split the two-wheeler from that 2.02%, two-wheeler is about, I believe, about 3.8%, and the balance is on the MSME side.
MSME, as you said, is
not
very
very
much lakhs.
6, 7, 8 lakhs.
Also.
So MSME would be almost negligible then?
MSME NPA is, almost negligible.
Okay. And so final question, on your MFI book, so my worry is more on the cattle side. Do you have a breakup in any, I don't know whether you track that or not, but loans which are going for animal husbandry, do you have that number, sir?
Yeah, of course we have it. I don't have it in front of me, but on average it's about 20, in microfinance is about 25% of the book goes to 20 to 25%. In the MSME book, it's a little bit higher at about 30%.
Okay. Sir, thank you very much. Great work and good luck for next quarter. Thank you.
Thank you. Thank you.
Thank you. The next question is from the line of Amit Mantri from 2.2 Capital. Please go ahead.
Hi, Alok. Congratulations on great performance. Congratulations to the team as well. So,
thank you.
A few questions, just if you can comment on.
Sorry to interrupt you, Mr. Mantri. May I request you to speak on the handset mode, sir? There's a lot of echo from your line.
Sure. Is this better now?
No, it is not. There's a lot of echo.
Is it better now?
Sir, I think you're on speakerphone, right?
No, I'm not on speakerphone.
Okay, this is better. Thank you. You may go ahead.
Yeah. So main question is on the competitive intensity in the MFI space. Bharat Financial had red flagged that, we're already seeing some kind of overheating in West Bengal and Orissa. So just wanted to get your opinion on, how overall borrower level leverage is playing out in some of the states that you're operating in. Is that a matter of concern for you or not?
Yeah, Amit. So I think, there are certain states, as you said, West Bengal and Orissa, to a certain extent, in some states in eastern India, maybe Bihar to a certain extent as well, that are being overheated. The NPA levels and stuff are still relatively stable. I don't think there's anything to be too concerned about. But I think there are several players that are, increasing ticket sizes and, going a little bit above or beyond what the industry is really used to. And to a certain extent, that is true all over India. So I guess the best way to answer your question is yes and no. Is there a little bit more competition than what we are used to? Yes. Do I foresee that to be an issue in at least the states that we operate in? Not in the immediate future. No, I don't expect it. Overall, I think people are still pretty diligently following the RBI norms. And the NPA levels seem to be under control. Even during post-demonetization, after that, there have been no heavy spikes that I have noticed in any of my districts that I've been operating in. So, I guess the best way to put it is we'll keep a close track on it. But I don't foresee any larger issues, at least in the next year, due to competition coming in the areas that I operate.
And the majority of your growth is driven by new borrower addition, or has it been driven by ticket size increase? So if you can give that split of what percentage is...
No, so the ticket size, mine is about 26,000, between 26 and 27,000 on average. That is all cycles combined. My first cycle customers is somewhere in between 20 and 25,000. On average, it's about 22,000. And most of my growth has been, so we have about 2.75 lakh customers, out of which about almost 60% are new borrowers. So,
sorry, how many are new borrowers?
Almost 60%.
So we've added about 31 new branches.
Yeah.
Which itself is about 40% of the overall number of branches. So the onboarding of new borrowers continues to be about 60%. In addition, what happens is we've started to see the second cycle loans post-demon. So these ticket sizes are, here the ticket sizes have also moved up and the tenures have also moved up from, the earlier 15 months to 24 months. So to answer your question, I think on both the sides, in terms of the old cycle loans, the ticket size has been moving up. And as we do the geographic expansion, the new onboarding also continues to be there in terms of the entire growth story.
And what's the current state-wise split of AUM?
Yeah, I have that. 1 second. Yeah, it's a fair split. So we have, on an AUM basis, Gujarat is about 30%, MP is about 26%, Maharashtra is 21%, UP is 20%, and then about 2-3% are split in between Uttarakhand and Rajasthan. So Rajasthan we have just expanded into, and Uttarakhand we only have about a couple of branches. So that's through the UP operations. Pretty well diversified, considering 2 years ago, 81% of the portfolio was in Gujarat.
Okay. So, no, thank you for that. I'll come back again in the queue.
Sure.
Thank you. The next question is from the line of Vishal Agarwal, an individual investor. Please go ahead. Vishal Agarwal, your line is in the talk mode. You may go ahead with your question.
Yeah, hello. See, I want to know, in 3 to 5 years' time, where do you see the MSME book? Like, you're doubling the book this year, so do you think it will be equal to the MFI segment at par in terms of the AUM size?
It's a little early to make that determination, to be honest with you. This answer really go either way, but India being the dynamic country it's very hard to project out 5 years, to be very honest with you. Of course, we do projections to look at the next 3 years. In my 3-year projection, no, I don't have it going out to equaling the microfinance segment. But that being said, if you look at a longer-term perspective, I feel the next thrust of growth might come from the MSME segment, or at least the individual loan rural category, whether you call it MSME or whatever else you call it. So I expect it to grow much faster than the microfinance book in the next 3 years. But I don't think it will overtake the microfinance book, at least in the next 3 years. Maybe in 5 years or 10 years, it's a little far for me to predict, to be honest with you.
Okay, thank you, Alok. And second thing, see the two-wheeler business, I think this was discussed sometime earlier in Concall also, is low in terms of ROA. It's also giving you higher NPAs as well. And even the net profit compared to the others are lower. But still, this is an older segment of yours, oldest segment, and you are still keeping it. So on a long-term perspective, again, would it be more advisable to concentrate the capital and management bandwidth on the MSME and microfinance and reduce the two-wheeler business further? What's your views and thoughts on that?
So it's still about a 2.5% ROA business. I'm sort of reluctant to see. My overall strategy has been to diversify the product line. So along with your previous question about concentrating too much in microfinance, it's true. I've said this earlier before that I would like microfinance to be no more than 2/3 of my business. We are at about 70% right now. So for me to shut down a profitable business, even though the margins are, of course, not as high as microfinance or MSME, I don't know. I'm just a little reluctant. Maybe I don't think it's sentimental reasons. I think that it's more on a risk framework basis. If you look at demonetization and things like that, my only division that was functioning was two-wheeler. And it was kind of a savior. So from a risk framework perspective, I would still like to try to grow that business as long as it's operating profitably and giving a reasonable amount of return. See, you also have to understand that as far as the NPAs are concerned, it's a more secure business. So the loan losses are not as high as the NPA.
Okay.
The loan losses in the two-wheeler book is about 1.5% to 2%.
Okay.
So we do manage recovering even once it hits NPA. Historically, if you look at it, earlier the NPA recognition for two-wheeler was 180 days. And now it's recognizing as 90 days. So there are a lot of customers that actually we manage collecting from, even though they are not repaying for 3 installments, in the kind of customer segments we deal with.
Okay. Thank you, sir. And one last question. In the MSME space, are you also doing cashless collections? Are these people giving you debit instructions and you're doing cashless collections from these people?
Not yet. See, I have a different perspective than a lot of people. My theory is that, and I think I said this earlier as well, so forgive me for using the same term, but the secret sauce in the MSME and the microfinance, apart from everything else, is the doorstep collection. That is critical aspect of the asset quality that we are maintaining. And as long as the customers are willing to pay for the doorstep, through the revenue or the interest they are paying, indirectly they are paying for the OPEX for me to go and collect at their doorstep. So, not big fan of insisting on moving towards the cashless collection just yet. Of course, like anything, open to having my mind changed for me. If something industry changes, or if people's culture changes, or in the rural areas people start using banks more. But I'll just give you a perspective that in my urban two-wheeler division, my check bounces or my instrument bounces is 15 to 20%. I'm just estimating here in the rural areas, I'm guessing it will be 50% plus. So in any way, I'll have to go and collect money from 50% customers on a cash basis to begin with. So I don't think it will offer much benefit from an OPEX perspective, and I'll lose a lot with losing that touch with the customer.
I see. Okay. And just one last question, sir. You are doing weekly, fortnightly, or monthly collection now? Because earlier I think you had moved from weekly to fortnightly, to still fortnightly or monthly now, the collection that you're doing in MSME and the MFI space.
Yeah, so MSME has always been monthly, so that's about 100% monthly. Microfinance is about 80% is on a monthly basis. And about 20% is fortnightly.
Fortnightly. All right. Thank you all. Thank you.
Sure.
Thank you. The next question is from the line of Ravi Naredi from Naredi Investment. Please go ahead.
Company market cap is only 225 crore, but you are presenting good presentation for investor and doing Concall. It is good. We thank you for this. Sir, a government gives 12,000 every year to every farmer. How do you see and what impact on our business you see, positive or negative, in current year onwards?
I mean, so as I mentioned to one of the previous questions as well, sir, is that our business is not very reliant on direct agri. So we don't typically give money to farmers who majority of their household income is dependent on farming. But that being said, as far as I am concerned, it can only be more positive. If the government puts more money in my customer's pocket, clearly they are open to being able to afford maybe a higher loan size, and their financial condition significantly improves to repay my loans as well. So clearly that will be beneficial for me. Whether it will be beneficial for the country as a whole, I'll leave my comments to that for the side. But for me, I think it will be beneficial.
Okay. And second, net interest margin is more than 10%, while RBI has kept 10% interest margin. So how it is, some differences are there?
So, sir, RBI caps 10% over my cost of borrowing. The NIMs will include the equity portion as well. So that comes, I guess, for lack of a better term, free of cost. So that's the difference you are seeing.
Okay. And sir, what is the borrowing cost at present? Incremental borrowing cost?
So in the microfinance book, it's about, so I'll give you an all-in cost. Interest rate perspective, it will be about 13%. All-in cost will be about 14.5%. In the two-wheeler and MSME book, it will be about 12.5 to 12.75% interest, and about 13.5 to 14% all-inclusive cost.
Microfinance, how much?
About 14.
All in, it will be about 14.5.
14.5. And what is our borrowing cost?
Oh, that is our borrowing cost. I'm sorry, I'm a little confused. You are asking me what the cost we are, what margins we are lending it to our customers.
The incremental borrowing cost at present in last 3 months.
Incremental borrowing cost. I'm sorry.
Yeah.
I don't have that exact details with me, but it will be probably 20 basis points higher than our average borrowing cost. So let's say about 14.75%.
Thank you. I would request Ms. Naredi to come back in queue for follow-up question. We'll move to the next question, which is from the line of Vinay Ambekar, an individual investor. Please go ahead.
Good evening, Alok. If you could just throw some light on the technology aspect that Arman is adopting. You mentioned that you implemented the ERP package. So one is what kind of benefits does it bring in? Then the cost that you incurred, have you incurred it through the P&L or have you moved it through, amortized it through the balance sheet? And a related question is, are you looking at any other technology-related initiatives?
Okay, so I missed a little bit of a portion there. It wasn't clear, but let me try and answer that. As far as our new ERP software is concerned, so we have completely sort of reevaluated our entire processes and systems and try to use the software or technology as much as possible in implementing, gaining efficiencies on that side. Couple of things to note here is that on the ground level, as far as the field team is concerned, you have to simplify the process as much as possible when it comes to technology. Because in very many aspects, our field team, when you talk about the field officers, team members, they are coming from the same place that our clients are coming, so they are not very, very highly educated or experienced people when it comes to technology. So given all of that, we have developed really a complete bottom-up approach to the entire technology that we use, starting from the field team, from the time that the customer shakes hand with the field officer. The field officer can manage using his mobile phone to run an Aadhaar check on the customer, to run the credit bureau check on the customer and get either a yes or a no or a maybe answer right there whether that customer is eligible under our profile. From there, he can schedule trainings. Branch manager can schedule, what we call GAT, the group approval test, which flows into our HO credit team. It will take me a while to explain everything, but basically there are no APIs left in between. Everything is integrated into one flow, and everything is mobile-based as much as possible for the field team. And of course, it's a desktop interface, a web-based desktop interface for our credit team and our HO team. And we have shifted the database to the cloud, so there are no server requirements or anything like that anymore. To be very honest with you, it's been a little bit of an uphill battle getting this ERP implemented, and it's been quite a learning experience for all of us and mostly for me as well. It will take a good 3 to 6 months, I feel, to get all the efficiencies out of it, to get people properly adapted to the new system. But I think moving to this technology platform is really a no-brainer at this level. So currently, when we are trying to reach 700-800 crores of AUM, I think we need to standardize or use technology as efficiently and as much as possible. But that being said, technology is a bottomless pit. There is no level. You'll have to find the right balance between overusing technology without incremental efficiencies gained as well.
So this doesn't help you in doing any all right, you covered that, sorry. What was the cost incurred in this? Have you incurred it entirely in the P&L for FY19 or you have amortized it through fixed assets in the balance sheet?
So it's a structured cost, to be honest. I don't have all the terms in front of me. But the licensing works on an upfront cost initially. That is, of course, in the, in the sort of the 7-figure range. And there is a license fee that we have to pay per branch that we open. So, depending on how many branches and stuff we open, the cost could very much run into, 500 million kind of a range. Plus, plus the hardware and everything other than that. So, overall, not very, very, it sounds like a large amount, but it's not very expensive.
On an AUM basis?
Yeah, on an AUM basis. And the good part is as we grow, as the number of branches increase, so that cost, we don't have to pay for it upfront. That cost goes along as we open the branches.
Right. Second, could you share some thoughts on the recent press reports that came for related to IBC for personal loans, which the government is considering?
I'm sorry, I lost you for a second. Say that one more time.
Yeah, am I audible? Hello?
It's kind of I think it's a bad connection, but go ahead.
I was asking regarding the IBC for personal loans that the government is thinking of introducing, where it involves loan waivers for individuals who kind of fall into the MFI category. So any thoughts on those?
To be honest, not really. I think these loan waiver things keep flying around all over the place. Until it reaches a certain point where I need to worry about it, I think it's best not to make any comments on that right now. But that said, we have been through a lot of loan waivers in MP and UP and in Rajasthan to a certain extent as well. So it did not affect our operations at this time. In the future, if the government comes up with such loan waivers, they will have to open up their coffers to make good on whatever the customers owe me, I'm assuming. So that will have a net zero impact as far as the financials are concerned. But I think it raises another pertinent question is all of these talks of loan waivers spoiling the overall credit culture? And I feel that is a much larger issue at hand rather than talking about the loan waivers itself. I think that it has a tremendously negative impact on the overall credit culture of the rural borrower and any borrower. And I certainly think that everybody should, or the government should be very discouraged to come up with such schemes.
Thank you. I would request Ms. Ambika to come back in queue for follow-up question. We would also request participants to limit your question to 2 at a time. The next question is from the line of Saptarshi Chatterjee from Centrum Portfolio Management. Please go ahead.
Hello, sir. Thank you for the opportunity. Sir, my question is on that next year, like FY20, we are going to open around 40 branches in FI and 10, 12 in the MSME. And we are doing so much technological expenses. So what is our outlook on the operational expense or maybe OPEX to assets for this and next year?
We are opening a lot of branches this year, but proportionately we opened so many branches last year as well. And as a percent of profit or a percent of portfolio, I don't think the technology is going to add that much of a burden to the overall cost. So I don't think that the operating cost is going to significantly increase next year over the past year. If anything, we might gain some operational efficiencies, which are more than what we have spent on the technology side. So it's a little early for me to comment on that right now. But I don't think there will be a large impact on that, on the OPEX side next year.
Okay. And in terms of, what is our capital adequacy ratio and what kind of capital are we planning to raise?
So we have sufficient capital right now to meet our growth requirements for the end of this fiscal year. I think the CAR ratio, that the RBI return on a consolidated basis, it will be approximately 30%. So just to give you an idea, we have about 130 crores of equity on a fully diluted basis, another 15 odd crores of tier 2 sub debt. So that's about 145 crores. Another 6 crore is sitting in accrued CCD interest, which will get converted into more shares in October. So let's put that figure at 150 crores. And you add in another, let's say, 20 crores of profit at a minimum. And you're talking about somewhere around 170 crores of equity for this year. Not counting the stuff which is off balance sheet that we have securitized. I think on that equity level, we can probably easily reach somewhere around 1,000 crores. So, in about Q4, we'll start evaluating the next equity fundraise. But I don't think there is an immediate concern on the capital adequacy or equity capital as of today.
And sir, in terms of MFI, when I was seeing the yield, so maybe my calculation shows that the yield has come down in this quarter compared to last 3-4 quarters. So, are you seeing any kind of pressure, and what is our outlook on that?
The yield has gone down, you are saying? Hello?
Yeah, in the MFI business.
In the MFI business, the yield has gone down? No, I don't think so. I'll have to look into that. The yields have not gone down. If you're seeing some ratio out of skews, many times it's timing differences or related to mixes between tenors or things like that. But Vivek, let us look into that. But because that shouldn't be the case.
Thank you. I would request Mr. Chatterjee to come back in queue for follow-up question. We'll take the next question.
Let me just say that. Are you talking about NIMs? The last caller? Okay, I think we must have lost him.
Give me a moment. I will unmute his line. Saptarshi Chatterjee, your line is in the talk mode again.
Yeah, I was talking about the yield only.
Not the NIMs, the yield.
Yeah.
So the NIMs have gone down because of function of leveraging and certain expenses related to securitization and other borrowing costs which happen in the last quarter that you have to front load. So that's why you'll be seeing the NIMs going down to a certain extent. The yield shouldn't have gone down. So anyway, we'll get back to you on that. Can we have the next caller, please?
Thank you. The next question is from the line of Sandeep Agarwal from Naredi Investment. Please go ahead.
Hello. So thank you for the opportunity. So my question is regarding the borrowing cost. So the company average borrowing cost is 14.75%. So in 540 crore of borrowing, we get 50% from the other financial institutions. So what is the borrowing cost which we finance from other financial institutions?
Say that one more time.
Hello.
Yeah. Say that one. Can you repeat your question?
Hello.
Mr. Agarwal, we can hear you.
Sir, my question is regarding the company borrowing cost. The average cost is 14.75%. Yeah?
That's the marginal cost.
As a marginal cost. So, sir, we get 50% of our total borrowing from financial institutions.
Correct. Yeah.
So what is the cost of borrowing cost which we get from financial institutions?
So it can be as high as 15.5% as well. But remember, I'm telling you this as an all-in cost. So we include everything, including processing fees and cash collaterals and other impacts are concerned. But sorry, Vivek, you were saying?
The overall cost is a blend of where it is coming from and also the timing. So we still would have a lot of loans which have been taken around the demonetization time of sales when the interest rates were pretty high. Correct. So over a period of time where the interest rates have also been brought down based on our overall credit rating and further moved up again in a cycle in the quarter 3.
Right. So just to give you an example, we had managed reducing our marginal cost of borrowing in Q2 of last year to almost 13.6%. Then after the liquidity crisis, further borrowings were happening at 15+%. And then we did a few transactions which were at... So it just depends on a lot of factors, to be honest with you. It depends on supply and demand.
Okay. Thank you. So my next question is regarding promoter holding. So in a company, it is only 39.75%. So any specific reason and any plan to increase promoter holding?
Any specific reason for the promoter holding being so low?
Yeah. Yes. Or any plan to increase?
I wish it was a lot higher, to be honest with you. This is a function of diluting starting all the way from 1995 till 2019. While we have, at every dilution stage, we have managed to put in some of our own money to not dilute as much as the transaction called for. But no, I think at this point, it will probably go lower, not higher, with further dilutions. But in NBFCs, this is quite common. I think as you keep growing, money is our raw material and you can only borrow up to 6 times your equity, give or take. So if you want to grow faster than your return on equity, you will have to dilute at some point. And as far as the promoters are concerned, there are limits to how deep my pockets also go. So I don't think that at this level we can match dollar to dollar on any dilution that occurs in the future. But of course, we are willing to participate in whatever small way we can.
Thank you. I would request Ms. Agarwal to come back in queue for follow-up question. The next question is from the line of Prashant Pawar from Newberry Capital. Please go ahead.
Hello.
Yeah, hi Prashant.
Sir, as you mentioned, the borrowing cost has gone up in the last quarter or the last year. So can you elaborate and say what is the borrowing cost and what cost you are giving up without the margin, like the processing fees and all?
You want to know what I'm charging to my customers?
Yes, and what is the backward, without the processing fee, what rate you are getting it from the financial institutions?
Acha, so without the processing fee and everything,
yeah,
it ranges from anywhere from 10.5% to 13.5%.
Okay.
Usually I look at it from an IRR perspective, so I'm not exactly sure what the average removing all those processing fee and cash collateral components will be, but my guess is somewhere around 13% on a blended cost.
Okay.
Now, as far as to the customers itself, in the microfinance division, we are charging a margin of about 24.5%, plus 1% processing fee. In the two-wheeler segment, the urban side, it's IRR of about 21 to 22%.
Okay.
In the MSME side, it's somewhere around 28%. So that's what I charge to my customers.
Okay. Thank you so much, sir, and congratulations for the great results, sir.
Sure, sir. Thank you so much.
Thank you. The next question is from the line of Amit Mantri from 2.2 Capital. Please go ahead.
Yeah, so just on securitization, I wanted to understand, do we carry any risk on the securitized assets on the balance sheet?
Yeah, so up to, I think, 5 or 10%, maybe?
About 8.5% is on average right now.
8.5%.
Okay. And you mentioned that you're now carrying 2 months of cash for deployment. What was the, so we were carrying it even in Q4, is it? And what was the impact in Q4 because of the higher cash balance?
So we are, rather it's been more on the, so the provision, or let's say the decision was made in Q4, but to get the balance up to 2 months took us pretty much the entire Q4. So the impact will be in the Q1 this year. And, as far as that, I think ballpark it will be, I don't know, Vivek, do you have some analysis on that?
We should be, going forward, try to maintain a month's disbursement requirements.
Yeah, so it will be about, let's say on 100 or on average balance of about 80 crores. We take about a 6% loss on that.
Got
so it. Whatever that turns out to be.
Okay, got it. And, any update on the conversion of the Class B shares? Any timelines on that? It's been quite some time.
Yeah, I know. So as far as the update on that is concerned, so we have approvals from BSE, NSE, SEBI has given its approval, which is great. We have approval from all of our creditors as well. And now the matter is sitting in NCLT for essentially their signature. The next stage will be the shareholder approval will be a meeting which is I'm not exactly sure of the technical term. I can get my company secretary here. But it will be essentially an EGM which is for this purpose. And we are estimating that will be sometime in July.
Okay.
Mid-July sometimes. And after that shareholder approval comes in, I don't think there is any other further hurdle that is there. Let's hope to get it done as quick as possible. But, the judiciary takes its own time, as you are well aware. So I want to get it over with as quick as possible.
Okay. Thank you very much, and good luck for the next year.
Thank you.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I now hand the conference over to the management for closing comments.
No, I think that's about it. Thank you, everybody, for joining the call, and thank you for the very, insightful and sometimes tough questions. Hopefully, I've been able to answer all of them to your satisfaction. If not, you are welcome to email Vivek or email me or send us a line somewhere, and we'll be happy to get back to you on that. Thanks, everyone, and see you next quarter.
Thank you.